All right, we're going to kick off our trading day here with a look at our prices and then invite in some extra help along the way, too. Let's go ahead and go to the board and take a look at our corn market and see if we are indeed firming up a little bit this morning. We talked about all the precip in the northern part of the Corn Belt. Well, we are starting with a firmer tone. We were about a penny higher overnight. Now we're 2 3/4 higher on that December contract. 374 1/4 is our last trade, and that's almost on the high of the opening range. Let's take a look at our soybeans here. Soybeans overnight, excuse me, they traded anywhere from, 7 to 9 cents higher in the morning trade, early morning hours. And now we're opening up about 10.5 higher at 893.5. And if you look at our wheat market to get things rolling here on a Monday, you currently have December Chicago wheat just fractionally higher. We're up 3/4. March now up a penny and a quarter at 495. And if you look at the Kansas City market, that December contract there in the KC is now trading 1 tick higher, 1/4 cent at 407 3/4. By the way, July is down 1/4 cent at 439. The Minneapolis wheat this morning is roaring ahead. It's up 9.5 cents at 556 3/4 right now. I want to invite into the program Dewey Strickler of AgWatch Market Advisors. He is in Franklin, Kentucky. And Dewey, right before the open, we heard that Mexico had bought another 120,000 tons of U.S. corn. There was a lot of anticipation of maybe a soybean announcement this morning. Did not get that, but another sale of corn. And of course, with all the harvest delays, with all the rain around now, it seems like maybe that's putting a floor of support under this market.
I think it is. Also, too, when you look last week, the funds, they covered about 55 million bushels of their short position. And you have the D's contract of corn here, Marlin, is up trying to bump heads with some key support at resistance at 377.5. And if we can move above that, we could see some additional short covering by the funds. Like I said, we did have 120,000 ton sale to Mexico, and we need all of the export business that we can get right now.
How are the funds positioned here on the grains?
They're short about 925 million bushels of corn. That's a decent sized position. I've seen them up short nearly 1.5 million. They got a relatively modest short position in beans at 305 million and wheat at 220.
All right. How does that compare to where they normally would be on the wheat?
Well, the wheat, I've seen them when they've been short, 500-600 million bushels there. So, I mean, this is just a modest position. Nothing to really catch your attention. It's just there. Let's just say that.
So it appears that maybe the harvest delays based on a resumption of the springtime pattern with real wet weather moving in could be getting more of the headlines now versus the fear of a frost that we had here about 3 weeks ago.
Yeah, I think that's right. With the funds short where they are, even though it's not a big position, it might be enough to get them over the hump of this resistance that we got up here at 492 to 493 basis your D's contract.
Okay, and again, a reminder, we'll have that quarterly stocks report coming out at noon Eastern time today, so be prepared for that. We'll have full coverage right here. We'll pause for a break right here, and we'll come back, and we'll take a look at how we're opening up in the cattle and hog markets after this. Dewey Strickler is along with us for the ride here, and we're going to take a look at how we're opening up in our livestock trade. This had a lot of interest in these livestock markets this morning based on, a whole bunch of stuff going on last week. Let's take a look. Live cattle first. We go to Chicago to the big board, and we currently have the October down 28 cents at 104.75, but gosh, tomorrow is October already. Hard to believe. December now down 48 at 110.10 per hundredweight. And most analysts tell me the December is where more of the volume is these days. We have February down 38 at 115.83. On the feeder cattle, let's jump over there. We have October down 88. We have November down $0.50 now at 142.47. And that is a quick drop off of an earlier high this morning at 143.20. So it surged ahead a little bit and then fell back. January down 32 at 138.38 this morning. On the lean hog market, we had that quarterly hogs and pigs report last Friday, and the impact so far has been lower. We have the October down 90. We're at 64.38. The December contract now down $1.20. We're trading at 68.65, and we have February now 65 lower, and it's trading at 75.15. As I mentioned, we had that quarterly hogs and pigs report that came out after the close on Friday. This is our first chance to trade on the numbers. And the all hogs and pigs report, or the all hogs and pigs number, came in 3% higher than a year ago. The breeding inventory was said to be 2% higher, and the marketing inventory was 4% higher than 1 year ago. We go back to Dewey Strickler. Dewey, I heard from several analysts over the weekend that hogs and pigs report was not necessarily overly friendly, although heading into the report, we were lower anyway, so it seemed like the trade was set up with a bearish bias.
Yeah, I think it was here. We were just a little bit overbought here last week, and this report, I think, is just going to give the market a little time to back off. I still think we could see these contract the hogs see a little pullback to 67. It might even go back as low as 65. But the trade, for the most part, they understand that China is going to need more pork here, and they think that they're just simply waiting in the wings here to come in and to buy. So I think that overall will keep some longer-term support in the market.
Well, 77.7 million head of hogs and pigs, that's quite a few. Hopefully they do need them. And they are starting their Golden Week festivities in China tomorrow, right? In the celebration of their 70 years under communist rule, is that right?
I think that is correct.
All right, so big celebrations there. They're going to see if they can maybe party without raising up too much chaos over there. So anyway, that may have an impact here on Chinese trade deals here this next week on account of that. Dewey, thanks so much for talking with us. Appreciate it, sir. Dewey Strickler of AgWatch Market Advisors, and he is based in Franklin, Kentucky.